Sure.
Making money is not stressful, but my point, I hope, was some of these stocks, you're watching them all the time because you don't know what's going to happen.
I do think this is a particularly stressful point in the market because I'm sure many of your viewers have made tons of money in, just a few names.
We hope.
They probably have large gains in those names. They're feeling a little nervous because valuations are the second highest they've been in 100 years, as we keep talking about. But so what do you do with that? The market seems strong. You've got momentum. You've got good reasons. You've got AI capital spending. You've got the one big, beautiful bill. You've got good earnings that have started already.
Yeah.
But we still have these valuations. So what do you do?
Well, you have a three-step plan. Now, in the great play and movie Glengarry Glen Ross, ABC, always be closing, you're similar. You say always be invested.
Right. So the first thing you don't do is get out. So the rule number one is stay invested. So valuation is a terrible timing mechanism. Yes, it's expensive, but it can literally stay expensive for years. And I managed money through the internet boom. And we had 5 years of, oh, my gosh, it's so expensive. And it did obviously end, but you would have lost a lot of money.
But you had four really good years out of those 5.
Absolutely.
The fifth one was more the problem.
Right. So rule number one is stay invested. But rule number 2 is even more important, which is you got to trim your winners. So all of a sudden, most of you are probably having outsized positions in the usual suspects, the ones we talk about all the time, the NVIDIAs. And these are great companies. And I'm not saying get rid of them, but I am saying reduce them, put them back to a more normal percentage of your portfolio and take that and shift it towards the areas that are less expensive. And 2 of my favorite areas would be healthcare and REITs.
Okay, so I do have a little bit of a bone to pick with the first pick that you brought in, okay,
Sure.
UnitedHealth Group.
Right.
Because here's my bone to pick. You have a guy that's going on trial for allegedly assassinating one of the group CEOs of this company.
Sure.
They wiped out all guidance. The CEOs changed. It sounds like you're convinced, and the stock has come nicely back, but it sounds like you're convinced the worst may be out. My only worry about UnitedHealth is we could wake up to a headline and the stock tanks again. We don't know.
Sure. Well, it'll be tanking from 50% below where it was a year ago. So the fall is not nearly as great. But more importantly, I love stocks where you've got the bad news list that you just came up with because that's in the market. That's also, I think, in the stock.
Okay.
So I think a company like that had proved itself over 20 years of increased earnings and they're good management. So that's the kind of thing we'd love to buy at such valuations as we're seeing right now.
Stock 2 apparently, dude, to paraphrase a very old commercial, dude, you're buying a Dell. What is it about Dell Technologies? This is not a company that sells laptops anymore. This is an AI play.
This is a total AI play, and it's about the only reasonably priced AI play that we can find. So at 14 times next year's earnings, you've got Dell, which is the largest provider of servers into these massive data centers. And every time we see revised numbers for data centers, they ain't going down, they're going up. So, and some of that comes to Dell. And instead of spending, 100 times for Oracle, you can spend 14 times for Dell.
Okay, the next one, we talk a lot about Boeing.
Right.
We don't talk nearly as much about their closest competitor, that is Airbus. It's another name. Now, Airbus trades, it's a French company, it's a conglomerate, trades in Paris, AIR, also has an ADR here, much less volume.
Right.
We know you like the company. What equity would you own?
I would own the ADR.
Okay.
It is much less volume, but it's still pretty liquid, especially for individual investors that are watching. And I like that. And look, Boeing's going to get their act together sooner or later. But there's another dynamic now, which is there are a lot of international countries and airlines that don't necessarily want to buy from the United States right now. And Airbus is perfectly willing to, take their orders, and that seems to be happening.
The ADR, we're showing the French shares, which are great. Right. EADSY. ADRs tend to have 5 letters. EADSY. And by the way, I feel like this is a market, and I know you got Embraer and Bombardier kind of in there in the smaller regional jets. China's trying to come up, but there's probably room for both Airbus and Boeing to win.
Always has been historically, but Airbus is encountering these supply chain issues that I think are much more solvable than the larger structural issues that Boeing is faced with. So we're happy about that.
Do you have a take, being a guy, and let's go back to the macro market. You talked about running money in the late 90s. There's been a lot of comparisons. I think some of them are silly because a lot of the companies that existed then, I know because I was at the NASDAQ, didn't have any sales, didn't have any earnings. But We started the show talking about these meme stocks, some of these rare earth companies. I've tried to scream at the top of my lungs. They could be great, but they have no sales. They have no earnings. Some of them have no actual operating business at the moment. They have investors and dreams and hopes, but we don't know. Is there anything similar between now and 25 years ago?
I think a lot. I mean, you know, they say history doesn't repeat itself, but it rhymes. I mean, this is rhyming pretty closely. So you're starting to get that. You're getting the meme stocks. You're also starting to get companies that are getting priced on 2030 or 2035 projections. Look at Oracle. Look at CrowdStrike. So these are things that we saw in 98 and 99, and it's spooky.
This is really important, what you're saying, and I won't use the word spooky, that's your word, because I want to just highlight to the viewers, and I'm not editorializing here, you can tell me if you agree or disagree. We've got OpenAI going around the country saying, you get a car and you get 10 gigawatts, and you get a car and you get 5 gigawatts. It's a joke, but not really.
Sure.
Those energy numbers are decades out.
Right.
I mean, that years minimum, decades more likely. Is the market pulling forward earnings that it anticipates for after 2030?
Absolutely.
That may never materialize.
And that's where, and we're only starting to see that in the last year or so, and that really worries me. The other thing that worries me even more is the circular nature. So NVIDIA makes an investment in OpenAI, and OpenAI uses that money to buy NVIDIA chips. The same thing happens with Oracle. And the money moves in a big circle, but we're not really sure what the earnings are going to be, and that's the big problem.
And that hasn't been a problem yet, and it may never be, but it's a good to be on the tape, just given that fair warning,
right,
to quote a Van Halen album cover.